Thank you so much. And we are transitioning for our next panel, VC Trends and Predictions 2026. Welcome to the show. Welcome back, Kathleen Estreich, partner at Pear VC and an all-star panel here. Kathleen, how have you been? Long time no see.
I know, I'm good. How are you doing?
Excited for this. I just have one question, and the stage is yours. What's your top GTM guide prediction for 2026?
Say that one more time.
What's your top prediction for AI and GTM for 2026?
Oh, that's a great question. And the topic of this panel, but I think things are continuing to get more and more competitive. And I think this year was sort of a lot of the hype, maybe not living up to it, but I think the technology is moving very fast. And I think a lot of the promises of 2025 will actually become the realities of 2026. So I think even in the prep for this panel, I was kind of comparing a bunch of the different co-pilots to help me. And it was just interesting to see how much deeper they're going now than they were even, 3 months ago when you would try and, do the same prompt. So I think next year is kind of the year of enterprises actually adopting things because things actually work.
Fingers crossed.
Yeah.
Take it away.
All right, awesome. Well, thank you, Julia, for having me, and thank you to the other panelists who are here. I'm Kathleen. I'm one of the partners here at Pear. We're a pre-seed seed fund, specializing kind of early stage on the pre-seed side, typically leading or co-leading rounds, and on the seed side, same thing. So we do everything generalist fund. I focus a lot of my time on B2B kind of application layer. I'm really excited about the other panelists we have here today, so thank you all for joining. So I thought it'd be great to have you all give a very quick intro, and then we can dive in. So maybe your name, your firm, the stage that you invest, and then we can go from there. So maybe Matt, you can kick us off.
Hi there, it's Matt from Fika Ventures. We're also seed and Series A fund. We invest checks up to $5 million in promising startups. We primarily focus on B2B. I lead our Fintech investment practice. And yeah, we've been around for about 8 years and about 550 million in AUM.
Cool. Jenny?
Hey, great to see everyone. Thanks for having me. Jenny Fielding. I run a fund called Everywhere Ventures. As the name suggests, we invest globally. We invest primarily across 3 verticals: money, health, and work. And we go really, really early. So, average round size, actually just crunched these numbers, was only like 1.1 million. So pretty small. We write small collaborative checks with folks like you, most of you on here.
Cool. Kirby?
Hey, I'm Kirby Winfield. I run a fund called Ascend. 1 in 4 AI software engineers in the United States lives in Seattle. And I'm from Seattle, and I ran startups here for 20 years, and I've been running a fund for 6 years investing in those AI founders. So we're enterprise AI and deep tech, 500K check, inception stage.
Cool. Twin Peaks. Change your name.
Hey, it's Sachin. The conference room here is making the background and the renaming difficult, so apologies for that to the group. Sachin, partner at Lightspeed Venture Partners, based here in San Francisco in Menlo Park. Lightspeed's a multi-stage firm, sort of investing as early as pre-seed or seed, and as late as pre-IPO, which means check sizes anywhere from few $1,000s to upwards of $1 billion at times. We invest sort of across the stack: consumer, fintech, now AI, infrastructure, application layer, model layer, etc. I spend all of my time investing at the growth stage, which for us means sort of Series B to pre-IPO. AI apps and consumer fintech are where I spend all my time.
Cool. Bring it home, Praveen.
Yeah, great to be here. With Insight Partners, we are a multi-stage investment firm, everything from Series A's through late-stage growth. I specifically focus on our early-stage investments, so Series A, Series B, though we've done a few Series C's as well. Primarily, I have an operating background, so I was an engineer at a startup, So primarily focus on the infrastructure side of things and things like dev tools, cybersecurity, automation, obviously everything to do with AI these days. But yeah, Insight's been around for 30 years. Our latest fund, Fund 13, is about 12.5 billion. So we have a pretty broad check writing capability. And typically we try to find companies, partner with them early all the way through the journey.
Awesome. Well, I'm excited to have all of you here. I actually hosted a lunch yesterday with about 15 or 20 emerging managers and talked about similar topic around kind of trends for 2026. I think as we look ahead, it's always good to sort of think about the year that we just experienced, which I think was a pretty dynamic one in the world of venture and startups. So I think one question that I wanted to start off with was kind of underwriting and how you think about defensibility, and particularly at the earliest stages. So I know Jenny, you and Kirby and I spend a lot of our time with like very, very early teams, often, some sense of an idea, but sometimes not even that. And would love to kind of kick off with you, Jenny, of, how do you think about kind of moats when you're making these bets on teams? What's defensible? How do you think about that when you're investing at the earliest stages, given, there's like 50 companies in every category, at least.
I was going to say only 50. Come on.
Yeah, I know. Yeah. And there's one very narrow niche, but yes, I think there's like many, many companies out there in every category. And then there's a lot of, it's never been easier to build. So, how do you kind of think about that when you're underwriting these companies as the first check-in?
Yeah, so this is obviously what keeps us up at night, defensibility. And I guess the way that I like to think about it, especially, at the application layer, which is the only place that we're investing, is this idea of like, a niche to a network effect, right? And so if you can kind of zone in on a very specific niche, so maybe you're doing accounting for real estate, commercial real estate, right? Something that's so specific, you can really build like incredible loyalty, brand awareness. It's, pretty easy to acquire customers. And like, I would argue that it's too small a niche really for the big guys to really care about or go after. So I think at the early stages, as you're getting kind of your footing, not just thinking about product, but kind of thinking about like what that mode is in AI, like actually makes a lot of sense, right? And so if you have a high switching cost, if you have a really engaged community that can then turn into that flywheel of a network effect, because the community is built, because there's similarities in your customers, because they're sharing the product, that has a lot of potential. Now, we don't really know, I think, is the answer. This is like my hypothesis on, early stage AI investing, but it kind of is too early to tell. But that's like the questions that we ask founders at the early stage, and what we try to see. We haven't really seen it play out is the honest truth. So I'm curious what Kirby's going to say on this side.
Yeah, Kirby, what are your thoughts?
I don't know either. But I think, I love the question around moat, because I think there is kind of a new mode emerging for some of these companies, and we've made 40 AI app layer investments probably since 22, and the ones that you see really stick. Kind of the question that we try to ask is, can you become a business unit within the company that you're working with, right? Within the customer, can you do that within some 3 to 5 year period? Mm-hmm. Because it's hard to, if you have a very high performing business unit, you think about that as an enterprise, that's not something you're going to let go, right? So there's a lot of stickiness to that. And I think what we start with is, can you become a really high performing employee? And then, can you kind of grow out from there? And it's hard, like Jenny said, like we're doing this, we literally, the last investment we made, the guy just quit Microsoft like today, and we committed to the investment a month ago. So it is very, very early. But what we've started to see is kind of if you start with getting embedded in workflows from day one, then there's some human in the loop, and it's non-critical processes. Maybe in year 2, you can now start to be generating data that informs those workflows, and you get better and better at those workflows, and you get more trusted by the customer. And maybe in year 3, you start to be able to provide some decisioning. And so I think that's how we think about this idea of like a business unit moat. But yeah, again, still watching it play out.
For those of you on the growth side, like how do you think about that moat? Because you're investing like, usually where there's a little bit more signal traction, customers. How do you think about kind of underwriting and a lot of companies are going from, early stage to then, the growth stage very, very quickly and raising that seed, Series A, Series B, Series C, the growth capital is kind of, king making in a lot of ways very early. So how are you thinking about that in terms of what you're looking for in companies around defensibility and sustainably, defending that as the companies grow at the stage that you invest? So maybe Sachin, you want to start with that?
Yeah, I'm happy to. I might give the same answer, which is to say, like, it's almost too early to tell. Defensibility is evolving. It's funny, like the patterns of what we all sort of looked at in the software context have really changed. You would normally look at things like retention and expansion, but the reality is enterprises are only just starting to adopt AI. So we don't even have like a year of ARR or data points to fall back on. And then it's sort of the question of defensibility vis-a-vis startup competition, but also sort of the model layer companies as well. And then you can get into a debate of what does defensibility look like if you're a horizontal player? What does it look like if you're a vertical player? On the vertical side, the things that we really look for are what is the fastest insertion point you can get into it for your customers or for an industry. And that's typically shown in like very fast time to value or ROI. So there's a lot of ROI in voice right now that we've sort of spent time thinking about as a firm. So if you can insert yourself with like a voice AI application and then build workflows to Kirby's point around that, that's sort of one way to look at defensibility and stickiness over time. But yeah, I mean, this is something we think about all the time, and I'd say it's still early, and there aren't a ton of like the traditional signals that we normally sort of fall back on.
Mm-hmm. Praveen, anything to add from where you
Yeah,
guys
I
sit?
mean, I think I broadly agree with, the comments made, right? It is clearly early. In some ways, as you mentioned, these companies are growing at a pace that's much, much faster than what we've historically seen with typical SaaS. And so, you have companies that get into, 10 million plus in ARR in a year, right? From launch. And I think, you know, one of the things that we do care about, again, I come from an operating background. I used to, you know, we did a startup, and customers for me is always sort of the North Star. So we tend to spend a lot of time with customers, both before making an investment in general. So spend a lot of time with CIOs, VPs of application, VP of engineering, and such like to really understand sort of how they're thinking through, their tool stack, right? Their sort of applications and evolving them. And so it's a triangulation thing, right? We try to get the customer's view. We try to figure out like, is there, to Sachin's point, is like how fast is the value realization happening? And is that sort of sticky in the sense that, there's certain category of companies that's like, works for the first few runs, and then afterwards it sort of, you need a lot of help to keep that thing going. I mean, most agents today are not quite good at long horizon tasks, so you need a lot of scaffolding, a lot of FDE and such like. So trying to understand exactly what does it take for this particular product to be successful in delivering consistent value for the customer. And I think the third piece, and this is something that we've all sort of come across, is this notion of the technology stack is evolving so rapidly. I think, like Gemini was like on the top of the, software rankings for a week before Opus came out. So the pace of innovation is so rapid, and the infrastructure is evolving so rapidly that you really look for teams that are able to understand, how the underlying foundation is zigging and zagging, and can they keep up with that, right? And that's a big part of trying to figuring out this picture. There's no perfect answer, I think, as everybody said.
Yeah. It's interesting. Kind of switching gears when you think about it's sort of, yeah, when you think about Jenny mentioned, looking for kind of that wedge use case that, they can nail. And then, the workflows were mentioned. So you land somewhere and expand somewhere. I think like 2 years ago, everything was a GPT wrapper on top of something. Then that went out of style, for a year. And now it's kind of back, but being very purpose built for very specific verticals. The big foundation companies are doing a lot on the horizontal side and, kind of owning some of that stuff. I think Google in the last couple of weeks is sort of coming from behind, well, not really behind, but coming up and making a ton of improvements. So how do you think about kind of feature, like nailing that one early wedge use case, versus building a platform versus building the workflows? Like, what is sort of your firm's stance on kind of feature versus company, and like maybe it's at different stages you're looking for different things. So maybe Matt, you can answer that one first. Like, how do you think about like feature versus company versus platform versus API, and sort of the things that you guys are specifically excited about, and then things that you won't touch, based on what's happened in the last few years?
Yeah, I mean, look, like all of us on this call are trying to make investments in platform, right? I mean, I think the features are the ones that we worry about, right? The feature only companies, right? That's where you come up with you find yourself in a situation where there's 50 companies building all these features. The platform is the critical piece, and platform is sort of a vague term, but I think the definition is actually how Kirby chose to answer it, about being able to penetrate a customer type or a department in a company, right? Because that's when you sort of are able to lay the bedrock for that platform. Also, platforms typically require not only the software services and data that your company may provide, but oftentimes the mode is created when you're able to integrate with your customers' data sets, right? Maybe a simple example is just being able to push and pull data from their CRM, right? It's very sticky. It's very tough to unwind that if it's a platform play. I think the riskiest model is the API model, right? APIs are extensible, they're flexible, they're beautiful. They sort of allow highly customized experiences, but you can flip them off with a comment in the code, right? And so, we always look to invest in those businesses that are truly platform, and that, even if we don't see it in the early days, like we have to believe that at some point that this can, be a GUI that is used or integrated into the existing systems at the customer.
Yeah, sometimes I think about it as like it's like act one, act two, act three of a company. Like act one, it's like nail this like very narrow use case, get a bunch of people who love you. Then act two, it's like build from that. Act three is like, be the end to end, but it's hard to, go from act one to act three. And then, anyway. So Kirby,
Totally.
you were smiling. What's your response?
Oh yeah, no, I mean a lot of this is just, same as it ever was, right? It's what we always tell our founders, like customers don't care about your AI. Like they care about solving their problems, and it's about trust. And if you can solve, I mean, Sachin and I are in an investment together, actually, in a vertical AI agent for financial advisors, and like they came in and solved one problem, which was secure communications. And now, because they did that so well, their customers are asking them to solve other problems. And like, so what we try to do is bet on founders who are going to follow that customer need and first build the trust and like nail that initial use case, because now more than ever, there's really no excuse to, I don't forget who, somebody posted on LinkedIn recently, an investor I really like, and I wish I could remember who it was. But that there's like, maybe it was Steve Vasello from Foundation, but there's no more excuse for like a minimum viable product. And I forget what he coined. It was something like minimum fantastic product or whatever. But like the point is, like, we have to have confidence that a founder is going to, their first swing is going to be a home run, even if it's in like a small ballpark to like a power alley, and not, it's got to be there, because that's what buys you the trust to be able to then go out and find those other problems and build for them. And eventually then when you solve those problems, you get the trust of the customer where they don't ask you to solve specific problems anymore. They wait for you to tell them what problems you need to have solved, and then you're a platform. I don't know.
Sachin, anything to add?
No, I think that was well said on both. We think in acts all the time, and it's particularly important at the growth stage because you were paying big prices in today's market, so you have to believe in sort of the multi-act story of these companies.
Yeah, that kind of brings me to, I think there's a set of companies that are kind of, the 5 to 10 years old, not AI native. Some of them have made super hard pivots where they're like AI all in. Others have been more hedgy. I'm curious kind of how those of you who kind of been in venture with maybe more mature portfolios, like how are you advising these companies? Because it's kind of, they have like 6 to 12 months in my mind until they're irrelevant. So Praveen, you're nodding your head. So I mean, Insight has a great, great portfolio. Like, how do you think about that in terms of, these companies that have been started, kind of pre-Gen AI?
Yeah, no, it's that's I guess the $1 trillion question, right? Because all of us have these portfolios, particularly for a growth stage investor, of some phenomenal SaaS companies, right? That were maybe 5 years old, 6 years old, that we're now trying to navigate this sort of shifting foundation that we were talking about with AI. And I think in some ways it always comes back to the North Star, right? Which is customer value. And you heard all of everybody say the same thing, right? It's like how you deliver customer value. And yeah, I mean, AI is a game changer. It fundamentally transforms a lot of a lot of aspects of how you build a product, from the user interface down to the kind of context you can bring to it, etc. But ultimately, the customer cares about solving their problem. So these companies that have been doing a phenomenal job, as SaaS companies, I don't think necessarily have an existential threat, because it comes down to, are they smart enough to understand how do they leverage this new tool called AI to accelerate their customer value, right? And in some cases, you're right. I mean, in some cases, it is a hard pivot. You have to basically recognize that, okay, like, I'm building a lot of legacy software. I need to fundamentally change the value proposition. It has to be agentic. In other cases, it is about basically enabling a different set of value for the customer by adding AI as an interactivity layer, or by making it more dynamic by bringing in different tools and such like. So I think the smart founders are trying to figure out, what does AI mean in their context. I think the more interesting question beyond, so there's the product aspect of things, and hopefully we've bet in founders that are close enough to the customer and closer to technology that they can intersect it. The more interesting one, I think, is the business case, is the business models are evolving, right? AI. And I think that in some sense is more interesting, because now software has a variable cost, right? At scale, obviously, the model pricing is still sort of on this downward sloping curve. But so there is a fundamental set of primitives that are evolving on the business model side that you need to think about, and make sure, like, how do you think about gross margins in the era where you need a lot of forward deployed engineers, right? How do you think about sort of retention where maybe there's a little less loyalty? So we used to have these benchmarks in standard like NDR, GDR, whatever, right? Magic number, etc. So smaller companies, smaller teams building more value. So I think there's two aspects to this. We think about it both on the product side as well as on the business model side, and try to kind of make sure we're tracking those.
Does anyone have a portfolio company that's done like an example that you think of a company that's done this very well?
Well, I mean, I have like an anecdote, which is like, actually, if you went back to a lot of the SaaS companies that you invested in 2017, 18, 19, and you looked at their decks actually, many of them would be AI first. I mean, I did this exercise. I went back to some of our companies that are past Series B SaaS. they actually had a founder or, a very important person on the team who was looking at that. And as the company progressed and they started taking capital from, some of the big folks, including people on this call, the priorities shifted, right? And some of those people were sidelined. So I'm not going to name the company, but we actually have 2 companies in our portfolio where the technical founder was a little bit sidelined over the last years because they were like just loving building cool stuff, including like very AI native, but like the technology wasn't quite up to there and the cash wasn't allocated to that. All of a sudden, those founders have like come back and been completely elevated, and the companies are really orchestrating around them. So I think it's a great exercise to like go back, look at which of these SaaS companies always had the plan to, obviously not become AI native, but that was like always the goal, and figure out like when the direction shifted. And I think you'll see at least 50% of them had that plan, and it kind of got sidelined. So I'd love to hear some of the later stage investors just talk about kind of what they've seen in their portfolio from that sense, because we did that, and we have like 2 companies that are kind of transitioning now, and the kind of original founders are really coming back in to lead that charge successfully.
When did they get away from it? Like, was there a consistent time, like based on what you observed? Or was it sort of gradual? I'm just curious.
Well, once they hit Series A and like $20 million came in, and like, the priorities of the company kind of shifted to just like all about sales and piling into like what was working, as opposed to developing new technologies and innovation, which was the goal at the beginning, because that's why those founders joined. They didn't want to just build like boring SaaS companies. Like they really wanted to kind of create something that was really more of what we're seeing now. It's just the technology was kind of hard. So I think it's kind of exciting to like get those people back in the forefront of those companies. Some of them never had it, I guess, but a bunch of them really did.
Sachin, what have you seen?
Yeah,
I think that was directly at the
I
growth
so.
investors. What did you do to mess these companies up?
Yeah, I can give two late stage examples, and these aren't like Lightspeed owned views. The 2 companies are sort of like very well known, and I don't want to say consensus, but well talked about. We've invested in Ramp very recently, and then we're also investors in Databricks, and those are 2 companies that I think everyone would agree started pre-ChatGPT, pre-AI, et cetera. And sort of the Ramp example, when we led this most recent round, what got us excited goes a little bit back to what Praveen said on team, right? Like, do you have the people in the building who can see around corners, take sort of the strategic turf that they've built and established over the last 3 to 4 years, and then apply AI to it, both in how they work internally and how they deliver products to their customers? And that was really clear for Ramp, right? Like Act 1 of the company was payments and spend management. Act 2 was bill pay. Act 3 was actually just a software product. And now they've sort of had the talent and team to take all of those inputs around payment data and software and layer on Agentic and AI products on top of it. So that's like a well-known and well talked about example that's sort of existed pre and post AI and gone through the journey of multiple valuations. Databricks very similarly was like classic software, and Ali has made some really smart acquisitions and built some really great products to position them for like AI infrastructure in the future. So those are easy examples to point to because of the success that they've had, but I think there are lessons from those companies that we sort of talk about with our portfolio founders as well.
We had a couple of months ago in one of our kind of quarterly portfolio reviews, sort of like, who are those companies that we need to go have that conversation of like, hey, if you don't go all in on, making this more agentic and more kind of AI forward, you're going to be disrupted. And, I had to have some of those conversations. It was interesting.
It's hard though, right? Like, Praveen said, I don't know that we've seen categories be totally eviscerated by AI yet. You could argue some education companies without naming them. You could argue, people thought Google and search was going to be eviscerated by Perplexity, right? And like that hasn't happened yet. So I think it's just about staying nimble and adapting more than is my company or category going to disappear.
Yeah.
I think one thing, I'll just say one thing we've seen is we have a legacy investment. Like Fund 1, it's been around for like 8 years. B2B marketplace, and it's good. It's fine. But what's really interesting is they started building their own AI tooling to like more quickly process and more efficiently process and assign jobs to folks within the network. And like they started turning it inside out and selling it to their big job demand customers who are in a very old stage kind of insurance adjacent industry. And it's the first time anyone's bothered to pitch these guys. And so they're starting to get traction on the AI side. And so now it's like, okay, good, because the multiple on your marketplace business sucks, but also like that keeps the lights on, and now you're riding two horses, and investors aren't going to like that. And so it's a really hard, even if you can get some of that pivot done,
Yeah.
like it's still very hard to pull off at much earlier stage in the companies that
Well,
other
it's like
folks are talking about.
Handshake is now, they were the recruiting platform for college kids, and now they're parlaying that into being like a Mercor competitor, which is pretty interesting. So,
That's right.
yeah. When you guys think about kind of business models, so back to the point Praveen made, I think like the pricing and service as a software trend around not just tapping into software budgets, but also kind of personnel and people budgets. Where are you seeing that work the most kind of within your portfolio? And what are your predictions on sort of how pricing changes kind of in the next 12 months in terms of a lot of these products kind of going to market? And feel free to kind of use real examples of companies that you've seen do this well, whether it's in your portfolio or just generally. Anyone want to kick that off?
Yeah, I mean, I guess I could take a crack at that. Yeah, I mean, I think we, as an industry, as software industry, we've kind of, come from the shrink wrap, the ELAs to subscription-based software. And, if you read if you're on X enough, you'll, the direction is towards outcome-based pricing, right? I think what we're saying is kind of the reality is it's a great aspirational goal to get to pure outcome-based pricing. It's a hard thing to execute because both as a company or a startup delivering the outcome or delivering the value, to be able to kind of capture that in a way that's not seat based or amount of data processed. It's a challenging thing to nail an outcome-based pricing model, unless of course you have something very clear like customer support or calls deflected and things like that, right? On the other side as well, we hear from enterprises, right? The CFOs have been now gotten comfortable with subscription-based models. They can budget for it, they can report on it, and they know how to build the financials around. Now you have an outcome-based pricing model. How do you actually create a budget, right? For let's say you have like 100 agents and all of them are outcome-based pricing, and with very number of users and spikes and such like. So I think we're, as an industry, broadly speaking, we're still kind of working through what that ideal pricing model kind of looks like. Some of the examples that I've seen is you kind of split the baby, right? In the sense that you have a platform-based pricing. So it's like, hey, here's my agent-based platform. So if you look at Workato, one of my companies, they charge like a fixed price for their iPaaS platform. It has all the integrations and the agent framework. But then they have an outcome-based pricing model for the agents that are built on top of the platform itself, right? And so it's a bit of an experimentation to kind of see how the customers adapt to this versus whether we're capturing value. So I think we're just like with the product itself, like we're going to iterate and learn where we land. But I'm not sort of fully bought into this notion that we're all going to go to outcome-based pricing just because now it's AI.
Mm-hmm. Jenny, you guys have a pretty big portfolio. What are you seeing kind of across your portfolio and what's working?
I'd say at the early stage, too early to tell. But we haven't seen like a huge shift in the later stage companies yet. I mean, we're kind of waiting for it. I think people are prepping, but quite frankly, we do a lot of, turnkey SaaS, and we haven't seen much innovation there yet, although we hear about it.
Matt, you focus a lot on fintech. What's happening kind of with pricing in the fintech world? Feels pretty dynamic.
Yeah, it is. I mean, I don't know if it's necessarily evolved as much. I mean, the fintech, if you think of like a pie, right? The disruption in fintech happens where you can try to figure out how to get a big slice of pie. Um, and so, that's typically would boil down to like interest or bips on interchange, or I don't know, like cost types of variables, right? Like what the default rate is and things of that nature if you're like a lending business. Or like take rate or the rev share if you're a reseller of like an embedded product from a fintech perspective. So I'd say those business models are pretty codified. The worry with those fintech business models is that they end up being a race to the bottom, right? That, it's your customers demand the economies of scale to be built into your pricing models. And as volume increases, pricing goes down. And oftentimes, if you're, built on top of call it a processor or a network, it's a catch 22 because your costs, structure may be upside down based on, what you charge in those early days. So it takes a bit of a leap of faith from the executive team and the board, where like we will sometimes prioritize the quality of logo and frankly the quality of the contract. I mean, I'm a former salesperson in enterprise and in banks and fintech, and so I like to get into weeds with our companies on the clauses and the terms that they agree to, right? Indemnification, what liability is, termination for convenience, right? Like all of these are like and frankly like the marketing rights. Like, can I talk about this customer, right? Can I put their logo on my website, right? There's a lot more that goes into like pricing than just the numbers. And so we'll sometimes sacrifice like optimizing price if we can like win some of those other sort of high value kind of variables as part of a customer contract negotiation. But I think the reason why fintech has been hot is because those, it's sticky. The services, tend to be an annuity, and like a bank or a large fintech or vertical SaaS company struggles to rip out the fintech products they embed. And that's sort of the beauty of the model from our perspective.
With more and more kind of products coming online, 50, 100 companies per category, I think go-to-market is mattering more and more, and kind of how you get unfair distribution, whether that's, through partnerships, ecosystem, channels that work, brand, founders who are famous, who can get that unfair distribution. When you think about, your companies across, bringing that product to market and across the go-to-market stack, what are your predictions for sort of what, this year? I think a lot of stuff, there was like outbound is dead. It's not really dead. It's just changing. So I think there's a lot of headlines and then there's reality. And I'm just curious, sort of, this is a predictions looking ahead to 2026. Like, what are you all excited about for your portfolios in terms of go to market, in terms of what's working, what you've seen, starting to be differentiated there? My thesis is like, I think the best product doesn't always win. You also have to win on go to market. And so I spent a lot of my time in the early days, like testing, do these founders have good instincts around how to bring products to market? Because I think you need that in this pretty noisy world. But yeah, curious to see, based on from where you all sit, like what are you seeing from the go-to-market stack and what's working, and how you sort of test for that when you're thinking about investing in companies or doubling down on companies.
Maybe I'll go real quick since I spend most of my time supporting our companies post-investment, and did operate as a sales leader for many years. What's happened with the velocity equation that Praveen mentioned earlier is that the messaging is decaying at a fast, the sales messaging is decaying at a faster rate than the funnel is developing, the sales funnel is developing, right? So like, I think that the biggest challenge companies have is they just don't update their materials. They don't update their website, like as the product evolves. And if like you're a power, like high operating engineering team where you're shipping new features like ramp, for example, on like a weekly basis, if your sales and marketing team isn't right there with you hand in hand and lockstep, you're gonna not be able to keep up from a go-to-market perspective, right? So now one might say, well, you find yourself in a situation where you're overselling, right? Because you're talking about all these capabilities and like the future of what the product is going to look like at some point down the road. I think that can be done in a transparent way, and it can get customers excited, both new and existing customers from an upsell perspective. But I think the strengths of the go-to-market team have to be like almost like a translator, right? They have to be really good at translating what's happening within the product and engineering org to what's actually happening with their boots on the ground as they go visit customers, and being able to map, the company's capability set to those customers and their workflows.
Yeah, I agree with that, Matt. There's three things that we talk about. One is what Praveen mentioned earlier on the sort of ROI equation for the decision maker. So what legacy budget are you taking, or what sort of productivity are you giving to your users, and how does that translate to pricing? Then there's sort of like the implementation and integration component of go-to-market. Forward deployed engineering is sort of the buzzy term right now. In the legal domain, it's legal engineering, right? And it's like, to get that ROI, you have to be, pretty embedded into various workflows and data in the company. And then the third leg of go-to-market, at least for us, is sort of user sophistication and education. Like, even speaking personally, like I don't know that I fully use all the AI tools available to me to my advantage. So, you think about people in whether it's legal or other sort of verticals, there's a lot of just like user education required as well to extract value out of the tools. So I think the best companies think about go-to-market on those levels.
I mean, I'll just add, I still think there's a lot of hesitation with B2B founders at the early stage to spend any time on things like brand. And that's something that we try to like shake out of them a little bit, because even with like no budget, you can create a really strong brand in a very unsexy category by LinkedIn posts, by, having some conferences that are kind of good for your users, your community. And we've just seen like it paying such dividends with companies really early stage. You just mentioned legal tech. We have a company called Udia, and like they've now raised whatever 100 million from General Catalyst. But like at the beginning, it was just like the founder getting on LinkedIn, just like talking about the way he saw the world. And we just encourage our other founders to like think about that, because it developed a very strong sticky brand around what his message was, and it really literally cost nothing. So I think there's still a lot of oh yeah, you're a consumer, of course you're going to invest in it, but brand at the early stage for B2B has a lot of power.
Yeah, I agree with that. And it's not expensive. It's just like also figuring out what makes you unique and having something unique to say in the market, which goes to like, why are you starting this company in the first place? And having something interesting to say. But yeah, I think the company, I think it feels like a big investment, but when you actually put dollars behind it, it's not actually that much money. It's a lot of time, because there's a lot of free channels out there. And the tooling for go-to-market is so much better than it was. I was an operator for a long time on the marketing side, and man, what you can do now is just amazing. With a very shoestring budget, it's amazing what's possible. Kirby, anything on your side?
Yeah, I mean, I guess I had two things. One, to Sachin's point, like the thing that you asked what we're excited about for 2026 and like what you think trends are. And I think on his second point around embedded engineering or forward deployed engineering, what have you, just like services, like bespoke onboarding. I mean, I think enterprises have realized that you can't throw LLMs at stuff and expect it to work. And I think that they're just realizing that, from as far as I can tell. And I think what that means is that they're going to be a lot more thoughtful about who they engage with and how they engage with them. And so I think, consultative sales and patient, the cycles are probably going to be longer than you want, but the dollar amounts that we're seeing committed to these first engagements, and most of it's software revenue, some service, but it's 250, it's 500, it's 700 for an app layer agent company. And that's, I don't know about Jenny, but like for me, with SaaS, I was used to, I'm used to like those first contracts, 25K, 50K. And so if you can land those with good logos and secure them and expand them, yeah, you might have less of them because it takes so long, but that is going to be impressive, durable, sticky revenue. And you can start to now pencil your way to 100 million ARR a lot faster after a very slow, sometimes trip to the first 2 million, if that makes sense. And then I think,
there was I don't know if you know Billy from Category. He posted something recently about forward deployed engineers, and it was like some skepticism because I think it's being used in the wrong ways sometimes, frankly, with founders where they're like, oh, we have nothing, but we're doing the forward deployed engineer strategy, and you're like, okay, what does that mean for you? It's like you're basically a consultant right now versus it actually. I think the way that Palantir did it, who made it.
Yeah.
Somewhat palatable from a venture perspective. I think people are misusing it in a lot of ways.
Yeah.
So
No, I agree. I think
talk about it. Like, how do you see it actually working where you don't get stuck in this services sort of rat race where there's no actual product?
You cannot conflate pilots with forward deployed engineers. Like that's not the same thing. So where we see it work is when a company has spent a year and a half like building something where there's a there and where they've had pilots. And just the realization, I think, for a lot of these companies is once you've done that, you're still not ready to sell. Like you're not a platform, right? So it goes back to our discussion earlier. Like you're just trying to get 2 agents deployed at the enterprise, or you're trying to try to automate 5 workflows. And like it turns out with all the security reliances and all the decision making that needs to take place at like a major pharmaceutical company or like a top 5 bank, like that it's 3 months just to get the spec done, even if you already have built the product for that engagement. And I think that's when that investment makes sense. And that's what we try to kind of guide folks to is don't like hide an unfinished product behind the window dressing of a forward deployed engineering strategy. But when it's right, I think it's right. And then just last thing, I think to Jenny's point and to your point around how cheap it is to do go to market brand marketing now. We tell founders all the time, and like literally one in 10 maybe listens, maybe you can just do like an 8-question survey, and you can send it to the person at your ICP company or the ICP. You can send it to them and make sure it's the junior person who hasn't been featured on any articles or LinkedIn's or anything. Send it to them. They'll fill it out. They'll send it back. You put it on your blog. You put a picture there. You write an intro. They post it on LinkedIn. All their friends like it because people like to like their friends' stuff. They share it. They'll boost it. Do that 200 times in a year in your category, and you will have a brand. And it's like, but and I mean, I don't know. So I wholeheartedly agree.
It's also like the investment in a website. It's like, even if you're doing outbound and your customers are enterprise, your website actually matters because people are seeing you on LinkedIn and then going to your website. And I think making your website very clear matters, even if no one's buying your product on the website.
Hard agree, but I'm a recovering marketer, so.
Me too.
I'm going to add a comment on the forward deployed engineers because this is something that it's kind of interesting to me, right? In some sense, we've always had forward deployed engineers. They were called solutions engineers or technical marketing engineers or whatever, right?
Talk about branding, rebranded.
Right. It's just now more cool, right? I think I saw an article from one of the venture firms which basically said the hottest job in the market right now, FDEs, right? But it also kind of tells us something, right? And it tells us that a lot of these AI native products are having a hard time getting customers to value out of the box, right?
Mhm.
And that's because I think we promise something more than what we used to promise with SaaS. With SaaS, it's like, hey, here's a piece of software. It's running on this website. You need your engineers or your business analysts or whoever it is to create the workflows to get the value out of SaaS. It was kind of baked into the assumption. And if you had Salesforce, you had a Salesforce implementation that came with Salesforce, right? Whereas I think with AI agents, we promise that, hey, these things do work for you, right? They're supposed to automate away a lot of the sort of analyst tasks that are going on top. And to actually make that work, you need a bunch of integrations and things that Kirby was talking about, policies, governance, etc. All of that stuff that needs to be bootstrapped before you can actually get the value. So effectively, there is no way for this AI agent to deliver value until you get it set up, right? And that's sort of now falling back to the company. So instead of the customer hiring a consultant to do the implementation, that is now on the company to make that implementation work. So this is what, again, talking about business models, right? You have to kind of rethink this. And I heard this like, oh, AI is a services business. It's like there's a lot of these things being thrown around, which are it's telling you something. It's kind of like first principles, trying to understand what's going on.
Mhm. How do you underwrite that though as a growth investor? Like, how do you view revenue that's, the software versus services, how are you thinking about that?
Yeah, I mean, I think for us at Insight, we've not had like a negative view of services-based revenue. As the CEO of a company, we were like at one point we were like 21% of our revenue was services, and the board would beat up on me saying, "No, you got to get this thing down." And eventually we were at 15%. That was the right balance, right? But I think it's really because we're early days, we haven't quite seen what a forward deployed engineer model means to the business model of that company, right? Because somewhere is it R&D cost? Is it like an engineer, or is it actually cogs, right?
Mhm.
How do you classify a forward deployed engineer? And so I think we're still kind of figuring this out. At this point, the focus again is on accelerating customer value, and so we're like whatever it takes to make sure the customer realizes the value. And then if you find that as a pattern, you're just going to have to handhold the customer like throughout their journey, then clearly there's something broken in the way the product is built, right? So
Yeah.
so I think it's again we're kind of learning through this as everybody was saying like we're so early in this, right?
Mhm.
Some of this is just going to get worked out.
Yeah. So we have about 5 minutes left. I want to make sure that you all have a chance to give your kind of prediction of 2026. So I've got a two-part question that everyone has to answer. The first is, what is one sector that you think will have the most unexpected kind of acceleration of AI? And what is one potentially long-standing category where it's going to become uninvestable and commoditized, basically? So uh, who wants to kick us off?
I guess I can go. That way I
All
have
right.
the advantage of saying the most obvious thing. But I think everything is going to go multimodal. I think platforms that incorporate multimodality are going to see this tremendous acceleration. Today, you see it primarily in the customer success kind of use cases, but I do think that directionally, if you look at the big steps that we expect the foundation models to take, it's in the area of multimodality, and I think um, platforms that incorporate that will see significant acceleration. I think we're going to get away from keyboards and at some point, typing on our phones. Um, the sector I'm kind of bearish on is vibe coding. I
Mm,
think there's like a ton of stuff. Obviously, platforms doing exceptionally well. It just feels like that's a category that maybe already the winners are determined. We also have to see as these models
mhm,
ChatGPT becomes a platform, and you see what Anthropic and all the other foundation models are doing. Whether that sort of continues to be you know the hot space.
mhm. Good ones.
Yeah, I guess building on that, we talked about this a little bit, generic workflow automation for low friction tasks, right? So I guess we talked about the wrapper, but I remember when it was like this amazing thing to connect to off-the-shelf APIs, right? That they can talk to each other, but obviously as that gets built into agents, that's no longer so interesting. And I think the area, so I just came back from a month in Europe, and I could tell you that where all the money is going there is into defense tech, obviously for macro reasons. But the combination of technology and how AI is, impacting hard tech and defense tech and all the money and the government subsidies, I think, 2026 is going to be heavily about that.
So I think ML Ops is dead. Long live ML Ops. So or ML Ops 3. This time it's for real. Like we're seeing a ton of stuff around the controllability, observability, transparency. Evals. We're seeing a ton of evals companies. Like I just think again because enterprises are finally figuring out that they can't just throw LLMs at stuff. They're like, oh, I have to do fine tuning. Maybe I have to build my own model. Like so, I think. It should be an interesting year in that category. And I think something that's going to be uninvestable is just anyone who's like an API, brokerage layer. Like I think that used to be really valuable, and it's just not going to be.
I can go. We're a big firm, and we have investments in most categories. So I don't want to say anything's uninvestable. So maybe I'll give you two predictions. One is. I think there's some really sleepy verticals that previously haven't been software categories. Jenny mentioned one earlier that I think was spot on around commercial real estate. Just sort of obviously big market and a lot of ways where AI can benefit. And then second, we talked about it. I think marketing as a category across the entire thing is sort of like on the cusp of something big. Image, video models are getting there. The way we discover, transact online is changing. Advertising hasn't found its way into LLMs yet. So like marketing as a category, I think is going to be pretty significant the next 2 years.
Cool. Matt, bring us home.
All right. Well, I'm biased because I do mostly deals in fintech, but I think the financial operations and relatedly the treasury automation opportunity is accelerating, especially as it relates to agents. I mean, true agent to agent commerce isn't quite here yet, from my perspective. But things like, fraud pattern detection that's model native versus rules based is enabling, lots of cool things in fintech, like reconciliation and cash forecasting, obviously interest optimization, compliance related things. So a lot of those workflows have largely been human driven over the past couple decades, right? Big teams at big banks and fintechs. And so I think there's a huge opportunity there that we're just scratching the surface on. And then on the commoditized side, I mean, this is probably an obvious one, but like the customer support and the ticketing world is being eaten alive right now, right? I think AI and automation and contextually relevant information that's pulled from lots of different systems at a company is disintermediating the customer support, all the legacy vendors in the customer support and ticketing, and a lot of those are very large contracts, and I think we'll see a number of those companies start to go away as more modern AI driven solutions emerge.
Awesome. Well, I think that's our time. So good job, everyone. Thanks for joining.
Thank you so much. Phenomenal
Yeah.
panel.
Thank you.
Thank you. Kathleen, how can we support you? What's the latest and greatest? Do you have a Substack?
Oh, I do not have a Substack anymore. I had one for my previous fund. But yeah, if you are a founder building a company, come find us at Pear, pear.vc. So investing, we're a generalist firm, investing kind of at the earliest stages. So if you're starting something or want to join something, all of our companies are hiring. So that's, I think, the best way to support us.
Thank you so much, Matt and Kirby. Matt.
Thank you. I mean, the same thing. We write checks up to 5 million at seed and Series A. So, and we invest a lot more in follow-on rounds. So, I'm also actively trying to hire for a number of roles within the portfolio, which are all on our website. So thank you again.
Very cool. Lots of folks resonated with you.